Yeah, so probably roughly half of you have attended our monthly cyber forum. This month we're going to make the focus cybersecurity insurance. And we have an expert with us to talk about this topic. It's a very timely topic, and as I think you'll see, there's a lot to kind of think about when purchasing cybersecurity insurance. Just a 1 minute overview of what we do monthly. So we hold a monthly call. We talk about some topic as it relates to information security or cybersecurity. It is you can ask questions. It'll be an exchange type call. We are anticipating on this call that there would be quite a few questions, just given the complexity and nuance of cybersecurity insurance. Next month, we're going to have a call focused on what to do in those first, 30, 60 seconds, 30, 60 minutes of a cybersecurity incident, what you can do to kind of mitigate a breach and just, try to do some advanced thinking in that regard as it relates to how do I get ready for a breach? God forbid it happens. And we'll touch on that today. You're going to hear Chad talk about the importance of cybersecurity insurance. You'll hear me talk about that from a CISO perspective as well. So, really two key purposes of this monthly call. How can we share ideas with one another about how we can be more cyber secure and what we can do to be more compliant, because we definitely do see the regulators getting much more active, including enforcement action and fines in the last couple months. The point is not to sell anything. We really want this call, something we used to do 7, 8, 9 years ago, very much an idea exchange type call with one another. So we want it to be solution oriented, peer to peer, share with your, people that do what you do day in and day out. We have some solution providers here. I see some CISOs here. I see people that lead information security from a business perspective. So we bring differing backgrounds. So that's important as well. But to move on to the call, I'm excited that Chad Ramberg of Box Professional has chosen to join us today. Chad has served a variety of roles. I'll just briefly introduce him. Working in claims in a large organization, working as a financial advisor, and then as most entrepreneurs like Chad, saw a deep need when serving as a financial advisor for being able to provide better insurance, more liability, regulatory coverage, and Chad launched into starting your business, Box Professional. So, Chad, what would you say about yourself that I didn't mention there?
Well, you hit it pretty spot on. The funny thing about me is that first 20 years of my professional career, I was on the claim side of insurance, and really what it was is arguing with carriers to get them to pay what was needed. And the reason that's germane to the work that I've been doing for the last 11 years or more is I'll say some goofy things sometimes, like cyber insurance is a waste of money until you need it, as is all insurance. But, you don't realize how good or not your auto insurance is until you use it, right? So there's just things like that every once in a while I might say something a little bit goofy, but I do have to say, Paul, I'm honored to be here. What I love about the work you're doing is it's educational, it's thought-provoking, it's an honor to be part of this conversation.
Yeah, well, thank you for joining us. And I did recognize you had a little bit different take. Obviously, I work with lots of different brokers, large and small. But you have an interesting perspective to share, or perspectives, as we'll see as we move through these slides. So the call will be 60 minutes, as every monthly call is. This one is recorded. We'll share it out. We hope you stay to the end. We hope you engage in a discussion with us as we go through this, basically a discussion between Chad and myself. Today, we're going to talk about some of the basics of cybersecurity insurance. We're definitely going to get into what's changing, the trends, movements in the market. hopefully giving you some perspective as to what you can do to capitalize on those changes in the markets, because there is a lot of pricing volatility as it relates to cybersecurity insurance. Chad, will talk about how to evaluate your existing coverage or the types of things to be thinking about if you're looking to purchase cybersecurity insurance. We'll also get into action mode. What can you do to best prepare yourselves to go through that underwriting process? And what can you do? How can you most leverage your policy once you have it in place? Earlier I talked about the fact that we want to get a little bit into, how cyber insurance relates to an incident as well. Anything you'd like to add as it relates to our objectives today, Chad?
Yeah, it's really a lot about the perspectives of the different players in the market. So, obviously when you're a CISO, you're a cyber expert. That's one key, and I would say one of the most important perspectives. And one of the perspectives that it easily gets lost when we're thinking about claims, both claims management, but also in the underwriting and buying the coverage, is remembering the perspectives that the carriers have and the different roles they play. Because, you know, um, doesn't mean we necessarily agree with them, but in understanding it, we can make better choices. And as a broker that only works with financial services, what ends up happening is how well we explain the situation to the underwriters has better results up front. And then also in the unlikely event of a claim, it has better results on the back end. So we're going to be digging into all of those different aspects today.
Outstanding. And I'll tell you, as a guy who does, 5, 6, 7, calls every day, you likely have the best microphone of anybody who's for sure ever been on the cyber forum. You've got a high quality microphone. I need to look into what you purchased. So just some basics, sort of 2 minutes on cyber insurance basics to do a little level setting for the audience, which continues to grow. What should you be thinking about when you're looking to purchase cybersecurity insurance policy? You want to cover data breaches, an attack, whether that be an attack in your company or also at a third party. It should cover terrorist acts. You should be thinking about what happens in the event of a breach. And you want to make sure that that coverage is anywhere. So, anywhere as it relates to where you may have liability, ensuring that that policy provides you coverage. Um, it's also really important, as you might know, but we're just kind of 1 minute on setting table stakes. There's first party coverage and third party coverage. First party coverage is going to be, it's going to protect your data, your employees, your customer information. It's the coverage you're expecting, the claim you're expecting to be paid in the event that you're reporting a cybersecurity incident. So that's first party coverage. That's your legal counsel costs, your notifying of customers, which can get quite expensive. You need to be thinking about if you have breach and there are lots of records involved, you are in our industry required to report that. And then in most cases, you're going to need to notify customers, and that's going to be costly. Crisis management and PR, forensic services. Chad and I are going to talk about the fact when you call that breach hotline that's on your cyber security insurance policy, that 800 number, they're going to do two things immediately. They're going to engage a law firm. Obviously, lawyers don't work for free. And they're going to likely almost immediately engage a forensic analyst or a firm that comes to understand electronically what information has been exposed. How did somebody access my information or money? Just get the facts as it relates to that case. So these types of costs I have listed here are first party coverage. Is anything you'd want to add to that? And I know we'll go deeper later, Chad, as well.
Yeah, so first party and third party, one closely related type of coverage that often gets confused with cyber and can be included in cyber is social engineering, and you have first and third party there. First party is always you, the insured. Third party is your clients. So Um, and I think it's probably a good time to talk a little bit about standards and lack in standards in this space. Okay. As we're going through this, one of the things Paul and I are going to talk about is just, oh, it could be this or it could be that. It can go a lot of different routes. So there's an organization out there called Insurance Services Office. With most of the property casualty coverage that's purchased out there, they set the standards for that. What I mean by that is they actually write the contracts, the endorsements, the exclusions, even put together a pricing list in it. Now, for financial services, they said for their professional lines, which is your E&O, D&O, and your cyber, they say they're not going to set any standards. In fact, to my knowledge, they said they're not going to set any standards for cyber insurance yet. But you get some de facto standards and different carriers kind of approach it in different ways. So the good part about that is lack of standards, lots of flexibility. Where it gets challenging is that's why we get so much variable here. And sometimes the answer is, while unsatisfying it depends. So, yep.
Yeah, and we'll come back, Chad and I will come back to that topic of standards over and over again. And it's important to, well, you'll see, it's important to really understand that. Third party coverage, that's, a case where you get contacted. Maybe, somebody feels, a client feels that you didn't do your job and now you are liable. Those are third party claims. So you've got a customer or maybe a regulatory fine. We're starting to see in the financial services industry fines, literally true fines related to cybersecurity, relatively small to date with the potential for immense growth, especially given what we're seeing as it relates to social engineering, as it relates to not following standards that are evolving to the point that they are, if you don't have multi-factor in place, shame on you. It's a standard that's really expected today. But any third-party claims are going to pay a customer a regulator that brings claim against you for the loss of non-public information or money.
Yeah.
Anything you'd want to say about third parties?
Yeah, for sure. Because here, where it can get interesting, although can be frustrating for clients, is understanding that third-party claims, even if it's triggered by a cyber incident, if the claim is coming from a regulator, D&O coverage may be key component to that.
Yeah, and it's kind of confusing because literally I can think of multiple incidents I've managed this year for a client where the client discovered an incident, they reported it to a regulator, all of a sudden the regulator gets involved. Now, then some customers hear about it. So it really starts to hit all those different elements that Chad was just talking about.
Right. And so that's why, at Box, that's where we're professional insurance. We're kind of looking at all of those different coverage lines. Now, obviously, today we're going to keep it focused on cyber part of it, but I'm just kind of that big picture is also important. I don't want to spend too much time there, but just want to mention that's how you get a Venn diagram sometimes with your cyber E&O and D&O.
Yep. Okay, so we've kind of set table stakes. The rest of the discussion is going to be a lot of, me and Chad having a conversation with, Chad really providing the professional content. When we were preparing for this call, you said it's particularly important when we're thinking about preparing to buy insurance, preparing to get coverage, that we understand the perspectives of both the buyer and the seller.
Mhm.
And we put together kind of this slide to discuss, buyers, what their focus might be, where solution providers such as brokers or carriers, what their perspectives might be. What do you think, is something something pretty relevant that we should make sure the audience understands about understanding these differing perspectives?
Yeah, yeah. So first thing that's kind of helpful in the insurance industry and is it's a very old industry. It's like 300 years old, really. And so what happens is when we're thinking about the carrier's perspective, they're always thinking about it from the law of large numbers. What's the most highly statistical probability that it's going to happen? And how are they're always thinking about can they price it competitively, but at the same time, make sure that they're not overexposed because they have to protect their balance sheet and have some assets there to defend the clients, right? So that's what
Yep.
carriers are always thinking about it. And they really stay up there in the clouds at the law of large numbers and try to build a pricing model that works, right? The risk
Yep.
appetite, I'm just going to kind of click through these here and interrupt me, Paul, if something triggers
Yeah.
a question or
Yeah.
something. The risk appetite was, so what they're talking about there is each carrier says, hey, this is the type of clients that we like. So, for example, some carriers say, we're really going after cyber and we're going to offer a lot of cyber to a lot of industries. Some carriers say, you know what, we like cyber, but we only like cyber for banks, or we're only going to insure, you know, RIAs or broker dealers or whatever. And there can be some overlap, but every carrier has an appetite that they lean to. And what that means is they have a certain type of client that they're going to typically be able to offer best terms. Okay.
Mhm. And
Uh,
is that because they better understand the risks in that niche, or is it they better understand the controls in that niche, or what's the dynamic there?
yeah, great question. So it's a little bit of both. And where it gets interesting is you also get brokers that, my opinion, the best brokers actually know what their appetite is and they know their clients really, really well.
Yeah.
So the answer is both.
Yep.
And what ends up happening is there are some really good carriers right now that are doing scans before at application time.
Yep.
So, it's really interesting. I was working with this firm. We had two different carriers run scans. One scan came back, said, you know what? Largely they're good. One carrier came back and said, oh, we've got these issues that are a concern. The
Yeah.
carrier that had the concerns, they said they're not even offering terms.
Oh,
And so, and now it's kind of a, you can have a program that's really good that you would help with, Paul, where
yeah.
you these are the plans if something goes wrong and this is how we're going to handle it. They'll ask
Yeah.
questions around that, but carriers are getting more and more sophisticated in actually checking and verifying. And so that's interesting where we have a lot of tools that are being built. I think of it, the good guys and the bad guys are battling it out, and the carriers are up here in the clouds trying to figure out where that next risk is going to handle. But if you have a carrier that really understands a specific sector and
Yeah.
they understand that a grocery store is not like an advisory firm and how
Yeah.
those differ, they can custom it to you, which is great. Just make sure you know what you're buying and how does that match to you. So the best brokers are usually on the leading edge because they're able to be more nimble and get ahead of what the carriers are doing.
Yeah. That's a key reason I asked you to come today is because um, uh, it seems some brokers are kind of biased, maybe in one, to a particular carriers. That happens all the time, but uh, I've never gotten that impression from you. And so, I mean, I think it's really important to be shopping, our coverage. I will say two observations I have as a CISO or a risk assessor is this year, the questionnaires have never been more detailed, in my opinion. Never, ever been more detailed, almost setting a standard. And we're going to talk a little bit about that again in the future. And also, I've never seen so many, some companies paying more, some companies paying less. Usually, in most years, it's all pay more. Well, all pay a little bit more, at least a little bit more, sometimes a lot of bit more, like 25% increases. This year, I saw it up, down, and sideways across clients.
Yeah. So it does go all over the place. And so, here's the tough thing about it. So I'm gonna push back a little bit on you, Paul, here.
Okay.
So bear with me. Here's what happens. You are correct when you say, it's good to shop this and understand what's going on in the market.
Uh,
Okay. We essentially want to hold the carriers accountable, and it's our a lot of times our fiduciary duty managing the organization to make sure that we are getting good competitive pricing, right?
Yep.
The flip side of that is understanding the carrier side of it is sometimes they're like, hey, um, this is the pricing, this is what we're going to do. And where it really gets frustrating, I'm working on training carriers to really understand, because most carriers will come to us and say, hey, we'll write that and we'll quote it if they want to work with us. And my response to them is, well, how are they going to choose to work with you if we don't get terms?
Right.
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 And in the cyberspace, it's interesting. We appreciate that they're building the tools to be able to check and verify,
Yep.
but it's especially when you get to the more nuanced and larger risks,
Yep.
we really have to be intentional and careful how we shop it. So my point is, you're right. We need to go through that exercise, but how we approach it, because what we don't want to do is take it to market every single year, and then the carrier's thinking we're going to jump from carrier to carrier. Obviously, that's
Okay.
not the goal,
Okay.
but we still want to make sure we're holding them accountable and we understand we're getting great terms.
Okay. I appreciate the pushback. I mean, we are just kind of having a discussion in front of everybody, and you're much more the expert than I. So I'm here to learn today too. Let's push through. So we're going to talk a little bit about trends. Um, Next slide. A little bit about trends, and then we're going to really get into this kind of the things that are impacting, coverage cost, things to be thinking about when you purchase. Um, So, real quick on trends, I think all of us, I know many of the people that are on the call, I know you're adept at understanding what's going on in IT and cybersecurity, but obviously one big network, this thing called the internet, lots of adoption of the cloud, nation states, in some cases like North Korea, literally using hacking as a method of taxation or raising funds for the government, whereas say the Chinese might be a little bit more biased towards stealing intellectual property of American companies to use for competitive gain. But we've got well armed resources, both private, some literally companies, obviously, kind of organized crime type companies doing hacking as a business, but we've got sophisticated resources out there. Um, in the regulatory landscape, we see FINRA, the SEC definitely starting to sanction and in some cases fine, broker dealers, financial advisors, oftentimes for just misuse of basic controls. Somebody didn't have multi-factor authentication turned on for email access, therefore, some financial advisor found a way to shut it off, and therefore the mothership, the broker dealer, ends up getting fined. I mean, it's essential, and I know Chad will reinforce this, that our basic controls need to be in place, and we need to be able to verify that they are in place. The last kind of friendish oriented thing I'll mention is just, all of us that work in this space are kind of a little bit undermanned. There's not enough truly capable cybersecurity resources in this country, kind of to fight the battle. One fact that I like to often quote is that last year I did a LinkedIn search for the number of positions open that required a CISP. It was roughly 90,000 open positions. There was roughly 87,000 CISPs in America alone. So just America. So if everybody quit their job and went to the new one, there would still be as many open positions. And that's just at the CISP, or the kind of the senior level. Other, thoughts, comments, questions, or comments you'd want to add, and feel free, anybody in the audience, to also ask questions. You can just submit them online.
Yeah, yeah. So the key thing here is you're right. It's a war, and we kind of do this dance of, and Paul, I think you and I are so well aligned that we do this dance of we need to be upfront about what's going on and we don't want to scare. We want to
True.
make sure that there's we're informing so that smarter decisions can be made in a really challenging world, right? And this world, from an insurance standpoint, you have these big old ships that are just kind of moving through, and then you have all of these actors who are really nimble, and so it's a really this challenge between the new and the old happening,
Yep.
and that that is really where the rubber meets the road from because carriers, if we remember, they're looking in this at everything from such a high distance. They know that at any point when a code vulnerability is found, if they can sneak into it, can cause a huge, huge disruption. And what's goofy about that in the carrier space, there's basically two types of claims we talk about: severity, which means just very expensive, and frequency.
Yeah.
And what we can get in this space is there is a high frequency, but they can be kept fairly minimal sometimes. And then once in a while, something jumps through. To the nation state actors that are involved in it, there was a couple of years ago, and this caused a huge problem in the cyber insurance space. A big policy that was placed, I don't remember if Lloyd's of London was the reinsurer or if they were the frontline insurer, but when the Ukraine war broke out, there was some hacking that was done, and it was understood to be from somewhere Russia or Ukraine, one of the two. And essentially the carrier wanted to deny it because they said it was an act of war.
Yeah. And this was pre the official war starting, or at least
Well,
this last phase.
I'd have to go back and look at the articles and see when it was, but the
Yep.
point was, what happened is they said, hey, we're going to deny that claim, and it went to court. And then what happened is, as they was working through court, it came up that they said, no, you can't deny it for that. And
Right.
we're talking about billions of dollars in exposure. And what happened as a result of that, almost overnight, carriers stopped writing coverage because the reinsurers stopped reinsuring. And
Yeah.
so everything froze up for about 2 months.
Yeah.
And we were in a position where we were lucky just to get flat renewal quotes, and nothing new was been written unless it was really small limits,
Yeah.
because there was that exposure. So you had a really quick reaction from the carriers, which their reaction is, if it's going to expose their balance sheet too large, they're going to put the brakes on it until they can do something to contain the potential exposure.
Right.
And so what I'm trying to do is kind of help you get inside the mind of the claim, actually the underwriters, but it's not the underwriters that are making the decisions when it gets to that level. It's their supervisors. And if the edict comes from on high, we're not going to write anything right now, that's what's going to happen.
Right. Right. And obviously, and we should all expect, we all work in the for-profit world. The carriers have a right to make money too, and there is evolving risk here. Now we're really going to start to get into the meat of the discussion for the next 30-ish minutes. What affects my coverages and what that costs, and how do I best prepare for good underwriting decision. And sometimes it's about, I would guess, not even just one policy. It's like basic differing ways of coverage. But this is your wheelhouse. What would you pick and choose here to discuss or share with the audience about what really drives the interplay between coverage, cost, and underwriting, and the controls you put in place?
Well, the most important thing is the controls that are put into place. And,
Yep.
and really the function of having a strong CISO and a strong plan and a backup plan to the plan, and knowing your system and what is your your strength of your cyber posture. Okay. Now that's assuming that you're going to be attacked in one way or another. And because we do have I believe there's an increase in frequency of attacks. I think, Paul, you may
No
know
doubt. Oh
some
yeah.
history on
Electronically,
that.
we can all evidence that. Yep. But to your point earlier, for the audience's benefit, even though there's more frequency of attack, the controls to put in place, and it's not a super huge list, are very effective. So just doing the five, six, seven, eight things that I need to do, depending on my organization, right, works by and large, right?
Yeah, and then the biggest hole that we have in that, when you've got a really good support like you do, Paul, is then education, because it's the end user that can be sometimes the biggest hole. Now, there's good news is there's controls that you can put into place to help relieve that, but also education, because the most frequent claim I see out there is a simple email hack,
Yep.
and that's
Me too.
usually because somebody's busy and they just don't really look at it. My executive assistant, he had an email for me. Oh, you need to answer this, and I said, no, that's an attempted hack. Can
Yep.
it? Get rid
Yep.
of it. So it's education, and then for carriers, they like to see verification of that education.
Yep.
Okay.
Yep.
And the frustrating part of it is that even when we verify, we want to be able to say, oh, well, that should really greatly reduce the premium. It may or it may not. It depends on what we can show. But the reason it may not is because the carriers are also getting smart enough to know that it's there's the constant barrage, and they're in that testing. I mean, that's how hackers work. Test, test, test. They find a
Yeah.
vulnerability, they exploit it.
Yeah. So we
Um,
need to, as defenders, we need to be testing as well to ensure that, hey, do I have an endpoint or a computer that has, good solid EDR, endpoint detection and response on it? Do we always use unique passwords? Do we have multi-factor in place? Has the company started to adopt zero trust technologies, which are super effective? Um,
mhm, mhm. Yeah, and
does
then
the company have adequate, I mean, not adequate, but good, solid backups so you could recover from a ransomware event, for example? And then to your point, just like the bad actors are testing and scanning, are we on this side testing and scanning as well? And I did notice this year in particular, all the questionnaires we filled out with clients are asking those detailed questions.
yeah, and one of the things to do when you're looking at those questions, which obviously you are, Paul, but this is a good tip for everybody involved here. When you're going through those questions, what's helpful to recognize, those questions are probably there because they have had a claim that found that somebody did not do that, and it exploited that vulnerability. So what's interesting to see over the last 10 years is we used to have applications, cyber applications, multi-pages long. And then in the last 5 years, they shrunk down to, we could get quotes sometimes like 3 or 4 questions answered. Did you have multi-factor authentication? And they run a background check on your website, and what's your gross rev? And we get a quote. I mean, it got that simple for a while, but
Yeah.
now what's happening is they're expanding those questions because the vulnerabilities are found. Now, the evolving regulation of it, I like to talk here about a little bit. There's an informal handshake between the regulators and the carriers.
Yeah.
And what I mean by that is carriers are expecting the firms to be doing what they're required to do by regulators. And so they expect that, and there's no, to my knowledge, no formal communication between the two organizations, but they're both watching each other and knowing what's going on there.
Yeah.
And that's why some of the questions can sometimes come in and saying, are you meeting, for example, New York DFS?
Yeah.
Right? And if you say, yep, I am, they say, okay, great. They know what New York DFS requires, right? And so you'll get something like that sometimes, but we want to make sure we're meeting those regulations. And of course, then sometimes there's things above and beyond that that just smart operational procedures. So
Well, yeah,
yeah,
I would add there's no doubt in my mind the regulators have gotten stronger. Last month, I was at a regulatory conference, and a technical member of one of the regulators was showing how AI was being used to go out and read the publicly available CVEs or vulnerabilities, and the hacking was being, in large part, automated. So it was detecting that this organization uses O365, or their web servers have this operating system. It was then looking up, the AI was doing this, looking up the vulnerabilities and then introducing hacks, some basic ones that it would attempt to automatically perform. And then it generates a work list for the unethical hackers to use. And it was the regulator that showed us how this was happening.
yeah, yeah. And so then the other thing that's happening due to regulation, there's some interesting things happening where, for example, a firm is using your I was going to say it's not cryptocurrency, but it's the blockchain to be able to track how AI systems are being taught and essentially be able to wind back the clock so they can see if the AI systems are being taught how to hack and what information did they use to be able to do that. So they can, so what we're getting into, and this gets way beyond my pay grade, but this is what concerns carriers, is we're getting AI tools that are getting so sophisticated that they're using that in conjunction with, just as we're doing from a defensive standpoint, how do we use this to better create security? And so there's that constant push me, pull me
Yeah.
of challenges.
And what we can all do is evidence that we are properly patching what we need to be patching. Let's get into a little bit about underwriting. And we're
Yeah.
going to take this right into the next slide as it relates to giving the audience some actions to take. But how have you seen underwriting changes? I'm looking at kind of the second to last bullet and the demand for customization. How's underwriting changing? Do you see it becoming more based on specific controls? What are some of your thoughts and comments about just the underwriting process?
Yeah. Well, carriers are pretty much catching up, playing catch up all the time.
Yep.
And what's the most interesting thing about underwriters, there's a couple of carriers out there that were initially insurance brokers. And what they did was they built a better pre-underwriting process before they took it to carriers, and they were able to prove that by using some unique tools that they could actually identify risks before the clients, the firms actually knew they were there. From a statistical standpoint, they did it so well after like 5, 6 years, they were able to build their own insurance company.
Yeah,
Okay.
I know some of
So
these. Yep.
yeah,
Yep.
yeah. And so these are good things to recognize because of course the future is not going to look like the past, but it's probably going to rhyme. And
Yep.
and with AI, it just, you know, used well, it just amplifies our ability to be defensive.
And everybody
And
that's on the call, Chad, and you could comment on this too, Chad, but there are portals that some of these organizations give you to log into that allow you to kind of score your information security program and see the data that they are electronically gathering. There are tools like Shodan on the internet that do scanning all the time. Good and bad actors use them to understand where the vulnerabilities are. And the comment I want to make here is, and one of my clients is on the phone as it relates to this. Sometimes they're wrong. So sometimes the
yes.
electronic scanning that these more sophisticated organizations are doing is actually a false positive. So making sure your MSSP or your internal IT and InfoSec teams can push back when data is wrong. It's like monitoring your credit report. And when you
Hmm.
see a problem on it, that you report that back to say, hey, clean that up. That's not true.
I love that analogy, Paul, because it is absolutely true. Now, what happens in that underwriting sometimes, we've helped build some unique cyber programs specifically for organizations that are loosely connected, but their cyber risk is more closely connected as they scale up. In getting a solution, what the underwriting really got into was how did the parent organization really drive down the requirements and verify that those requirements are throughout the organization and each of the subsequent websites, email
Mm.
systems, and data servers underneath it. So we spent in that situation a whole lot of time actually documenting it, showing it, and then they did their scans on each
Mhm.
one of those points and said, okay, there was in this situation, there was 50 different endpoints there. They came back and they said, oh, there's 3 or 4 endpoints that we find these items, and we had to go through and clear them. And then
Mm.
we were able to get really quality terms. Now, before then, they weren't, the most interesting thing about that is that they had been told by multiple brokers that we can't get coverage that's that expansive.
Ah,
So that underwriting process, um, having what happened was this. The reason we were able to do it and everyone else had such a hard time is because we understood intimately the structure that they were talking about, and we were able to explain that to the carrier.
yep.
Okay. Because for you as the firm operator, you know what you look like, you know your organization better than anyone.
Yep.
And what's going to happen is when we take that risk to the carrier, presenting it clean and well can help you get past what I always say is the first thing you just want to get a quote, right?
Yeah.
And
Right.
because I'm really cautious sometimes of carriers, especially new carriers that come out and they'll just quote anything for cheap, because what that tells me is I got to really read that contract. I want to make sure nothing's going to get missed in there.
Uh, yeah.
But at the same time, the other side of that is, yes, we want the most competitive we can get. So there's the balancing act
Hmm.
between the two. So we're double checking that and we're watching that, and it's a team effort because what's fantastic is there's also tools being built that I believe in time will add a third party verification of some of these best practices.
Amen. Yeah, I know. I mean, some of my clients that are on the phone are very sophisticated and would welcome that. Let's push
Yeah,
into the
we're
next slide as we move towards the last 15 minutes here. We've got, 4-ish, 5 slides that I think are really action oriented we want to get into. As we were preparing, you talked a lot about standards and this double-edged sword. You've mentioned it. What other thoughts, comments? What do buyers of insurance need to know as it relates to standards and the fact that they don't exist yet?
Yeah, so it's really about it kind of links into the appetite a little bit, but when we say standards don't exist, we mean that from a very high level in the insurance industry.
Yep.
ISO's not standardizing it. What we tend to find though is that carriers and in some cases MGAs are actually starting to set some pseudo standards as we go.
Yeah.
Okay. And what's happening there is they're
Mhm.
really when they find these ways of working that they know reduce risk, of course they're going to lean into that. And we want them to do that.
Yep.
So understanding where and then we start to see some similarities. And that double-edged sword side of it is to say, look, for example, most of your RIAs don't take any credit cards. So there's a whole section that a lot of cyber policies they get really into, and that's an important risk to have coverage for
For
if you're
sure.
taking credit cards. But
Yep.
guess what? If you're not taking credit cards, that doesn't matter,
Right.
right?
Yep.
And so understanding where those come into play is really important. One of the coolest things that's happening right now, actually, Paul,
Hmm.
is there And so this is an AI tool that's been built to be able to dig into and check the standards once against another and bring up the language so we can see it in a snapshot and then dig deeper as needed.
Yeah,
For
yeah,
cyber coverage, we've got the tool for that today, which is pretty exciting. There's still an interpretation factor
yep,
because just like the surgeon that's going in with that, assisted robotic arm, you still need the surgeon there to help guide things and understand it. So the exciting thing is what it looks like to me is the lack of standards will end up being a stronger effort when we can match everything together as we know it should be.
yep, yeah. When what did you mean by know your firm biography when we're thinking about coverages?
Yeah, so firm biography is essentially when you go through that application, it's understanding who you are, how it matches or doesn't meet match that application. Okay. And it's not every question, but at a high level, when you start plugging in those different factors, you start to recognize where that's going to align with different coverages. So, and these are sometimes factors that aren't going to be on the application. For example, the ones that come up most often with our clients that we don't need to tell carriers about, but it really informs the choices we make is maybe you've got a new initiative as a firm that you're going to start growing instead of just your organic growth. Maybe you're going to go out there and do some M&A work, right?
Hmm.
That changes the risk on the cyber side
Big
as
time.
much as
Think
it does
United
on the
Healthcare.
E&O side.
I
Right.
mean, that
Oh,
the
yeah.
huge breach that most people probably heard about recently at United Healthcare was because they didn't do good due diligence in an acquisition.
Yeah. Yeah. And I've also heard of some acquisitions that right at the last minute they got axed because there was a component of cybersecurity that wasn't strong. Right.
Yep. Yep.
So, and that firm biography, so it's how do we look now? The one that's not going to show up on the application is where are we going? Communicating that with your insurance broker because they're going to be able to help guide you through more effectively what that's going to look like.
Yep. Definitely want to get to this slide. We've got about a little over 10 minutes left because when Chad and I were preparing, we were talking about how to frame, your purchasing coverage discussion and your actions, and some dirty little tricks that carriers do use, which I would if I were a for-profit company to limit risk. But as it relates to framing coverage, you said early, right at the beginning of the call, you said, and this is just, I was talking with my family about that this weekend as we were making having some estate planning discussions. Um, some view insurance as a waste of money until you need it, right?
Yeah. Yeah. Another way to frame that, well, because we got a lot of good financial minds on the call. Another way you might think about it is what you're doing when you're buying insurance. You're paying for an unknown risk, a known expense. So let's say, you're paying $10,000 in cyber coverage, but you have, 5 million in limit, right? Or I don't know, maybe that would be a unique situation, but 10,000 bucks for 2 million limit. Okay.
Yeah.
And you know that's a sunk cost every year you're going to pay that. And you hope you don't have to actually pay out limit. The unknown risk, it's a really a known unknown, is that if something happens that starts to trigger in and spend up to that 2 million limit, you know that you're protected there, right?
Hmm.
And over time, that should work to your benefit. Now, there's other costs that's put into that because you're paying for the broker, you're paying for all of that. It's all wrapped into that. And the reality is from the law of large numbers, especially on those severity risks, which you can get in the cyberspace, and those are the ones that show up in the headlines, that those definitely is worth the money. Now, The best thing you can do, though, at the same time, is use that high quality cyber hygiene and recognize that what those carriers are doing. So we've talked about, and I'm going to throw a little shade on the carriers here. They do these reports, they all look great with ranking and stuff like that. And there is some value to that, but they're also using that as a marketing ploy.
Mhm.
So understanding, and they're also using those definitions that exclude certain aspects of coverage as I think of as a dirty little trick. They're not trying to trick anyone, but it's the responsibility of the purchaser to make sure that they know what they're buying. Now, the best brokers are going to help educate you so you know.
Yeah.
And these are those things that come into play when we say things like, if we're thinking about when we purchase the coverage, what do we expect to happen when there's a claim, or how is this going to treat us in the event of a claim? We're going to have a much better result when we get to that potential claim.
Well, I got a question for you. So,
Yeah.
this year, when filling out all these really detailed questionnaires, as a CISO, the thought that kept going through my mind is all this detail we're providing somehow, some way going to be used to deny a claim someday? Do you have a thought or perspective there?
Yeah. So,
And
so yeah, that's the right question to ask. The short answer is quite possibly. Now, there are terms that we go to in any one of these contracts to make sure we understand. For example, does the carrier have the duty to defend, or does the insured have the duty to defend?
Mhm.
Because in a practical sense, if the carrier has the duty to defend, if you get to a gray area that say, hey, we can't really tell if the language was intended to provide defense coverage or not. If the carrier has duty to defend, that means the expectation is they're going to pay for defense.
Well, question, pay to defend. I mean, the person getting insured has to do the cybersecurity defending usually, right? You're not talking about that sort of defense, like, firewalling, EDR, MFA. The
Right.
insured is,
Great.
yeah,
Great. Oh, this is awesome. Okay, Paul, because
yeah,
the reason is you are absolutely right. I'm not talking about the defense of the
I didn't think
system.
so.
I'm talking about the defense of after you've gone through the breach mitigation, you've done everything you can, and then you have a client that comes up and says, "Hey, guess what? They stole my medical records, and I'm, a famous
A third
person, and
party
now
claim.
everybody knows a third party claim. We want to have defense for that." Yeah, yeah.
Yes. Yep, yep, yep.
So, and then there's other language that comes into play, like selecting either your defense counsel, or what's that process look like when you jump into um, the breach mitigation portion of it. How do you want that handled? Because if we're talking about a firm that's, 5 employees and,
Yeah.
couple of million in gross rev a year, is going to be a lot different than 100 million and, hundreds of employees.
Yeah, and we get to that on our last slide, the next slide. One other question I have here. I saw a lot this year, ransomware, like you said, it's in the news, right? Sounds like it's
Mhm.
super expensive. We've ended up with clients because they went through a ransomware event. Um, but then I see a whole bunch of clauses like cyber events involving ransomware network extortion are subject to pretty small limit. I mean, what are we supposed to do about that?
Yeah, so
Because
that's
I'm
one of the
hearing about
tricks.
multi-million dollar, costs, but then the carrier's saying they're only going to cover up, to 100 grand or 50 grand.
Yeah, so that's one of the dirty tricks that carriers do. 50 grand or 100 grand sounds like a lot of money, right? I mean, if it's out of your personal checking account, yes, it is.
Yeah.
But if you have an established business and carriers have so much in assets, when you're talking about severity lines of coverage and you've got 5 million limits out there, if they can pay out limit at 100,000 and call it done and close the books,
Yeah.
that is sometimes a benefit for a carrier. And so that's the dirty little trick of say, oh, I've got coverage for that. Oh, yeah, but the sublimit was small enough.
Yeah.
that the carrier's literally playing the odds that if there is a worst case scenario here, they're just going to pay out and walk away, pay out
Well,
limits.
what do we do? What do we do if we're running into this situation? I mean, can you just buy some special coverage for those horrible possible events, or what do you
Yeah,
counsel
the
people to do?
Yeah, the best way to do it is it actually comes down into the underwriting because if we're talking specifically about ransomware,
Yeah.
when we can go work with the CISO, work with their team to explain we have these controls in place and we're doing regular backups and this is how we've secured that. So and we've also practiced if there's a breach or if there's a ransomware, we know how we're going to
Tabletop
deal with it.
exercise. Yeah.
You do the table, which, yeah, okay, I didn't mean this to be an advertisement for your next one, but it really does play into it here because if
Yeah.
you've done those tabletop exercises and the underwriter of the carrier can start to understand that, you can start to adjust those limits. Okay.
Uh,
And the best way to do it, sometimes you got to switch carriers. Sometimes you just got to show them what you're doing so they can get comfortable and reduce the law of those worst case scenarios.
Got it. Okay. So our last slide. We've had an incident. It's time to use our policy. What would you want to share with the audience there? And then feel free if you have any questions, lob them in, and we'll go a couple minutes over for those that want to stick around.
Yeah, the first thing is always using your cyber support team to shut it down. So the first call is going to be
Internal team.
whoever's on
Yeah.
internal team. Okay. Uh, it's funny. It's as small as sometimes just unplugging the computer, but that's on a small somebody that opened an email and anyway. So stop the bleeding. Okay. And then call your
Usually it's
those
a
that have.
breach hotline. That's your policy gives it to you.
Yes. So then it's a breach hotline and then call your broker, your insurance
Yeah.
broker. And the reason is obviously your internal team is going to work on stopping that immediately. The carrier, the breach hotline, they're going to start to putting together their forensics to find out what happened. One of the kind of hidden things that can come up, especially in the cyberspace, is if there's a breach, where did it come from? And what you want is obviously internally, you're going to be managing that as best you can. Well, the carriers are the gorillas in this world. And with them behind you, if they get through that discovery and they find out that, look, it didn't originate in your system, you
Yeah.
want that gorilla behind you to help
Right.
segregate it out. Okay. And then the broker, it's unfortunate that sometimes these carriers, when they get scared, they'll do some inappropriate things and go directions, ask for things that maybe they shouldn't be. A good broker is going to help guide you through that process.
Yeah.
And if you keep them clued into how it's going, every once in a while, I'll find a situation where I'll jump in and say, hold on, this is not going the way we expected. And have you forgotten about X, Y, or Z? Just
Yeah.
making sure the claims adjusters are not trying to hit the easy button and pass through something that they shouldn't.
Yeah. Yeah. And often that's a role we play when we're, providing like a VCSO service as well. It's like a third party
Yeah, it's a
perspective that has seen another incident.
exactly. It's a team effort. And of course, the bigger the team you have, the stronger it should be. And
Mhm.
and so having them informed as you go really helps. Doesn't mean they need to be chiming in or driving the ship. That's you and your on in-house team.
Yeah. If anybody out there has a question they want to ask here as we wrap up, feel free to raise your hand or to put it in the chat or in the Q&A box.
We did have a little bit, as people might be thinking, should I talk about some claims we've seen here?
Sure. Yes. Oh
So the
no.
small frequent claims that we talked about, those are the email breaches. And I've seen those are usually pretty inexpensive and quick to fix. And when I talk about inexpensive, I'm talking about less than $20,000 for the breach mitigation of it. Okay. What happens is once you get through that breach mitigation, if any of the claims clients claim that they have been financially harmed because of that breach, that's where you get into defense, and the limits still apply. And that's why we want more limit than just, a few $100,000 usually. Okay.
Yeah. We just got
Uh,
a
uh,
question. Somebody asked, how do I evaluate my current coverage? So I want
yeah.
to make sure
So
you answer that before we get off the call.
yeah, this is going to sound self-serving, but a good broker is going to have a process to be able to evaluate your coverage. And
Mhm.
on the cyber front of it, it's first they're going to know who you are, have a firm biography. They're going to have your contract, read through it, compare those two, and the best ones are going to actually compare other carriers to that because each carrier is going to approach it a little bit different. You're welcome to, I think the contact information will be here. We can talk about that with you.
Yep. Any other
Um,
questions? Go ahead.
yeah.
Keep going.
Oh, you just interrupt me, Paul, because I get going sometimes. But
No, 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 no,
uh,
no. I'm usually I cut it off right at the top of the hour, but
a
I just
claim
want to
that's not a breach.
right.
Okay. We see that every once in a while, and it's bad code. Look, nobody's being malicious here. We just wrote something, and when we ran the program, it did what we didn't expect.
Right.
Interesting claim I had like that is a client where he was sending out his quarterly reports, and the first client got the first report, the second client got the first and second on down the list. So the last client got all the statements of every single one of their clients.
I've
That
seen
was
third
a
parties do
cyber
that.
breach.
I saw Allbridge do that. Sometimes I hate to say that, but they allowed people to log into the wrong individuals' accounts. It was just staggered because of poor code. Like,
It was poor code. That's a cyber claim, or quite potentially a cyber claim, right?
yep, yep,
So, all of these are interesting situations. Paul, thank you so much for taking the time and having the space for this forum. I appreciate it, and I hope it's been helpful for everybody that's been here.
yeah. We've gotten a lot of positive comments. So, well, thanks for attending, and hope to see you next month. Bye.
Bye. Thank you, Paul.